think we're going to start basically a new trend of, we can't tell you how amazing these stocks and commodities are because YouTube will basically take them down. So yeah, I mean,
Yeah, I was surprised that they took down. Well, the major one they took down was the one where we were kind of giving ourselves a pat on the back because of all our previous predictions did so well. So they didn't take the videos down that we were making the predictions, but the one where we
mm,
were giving ourselves a pat on the back and said you can, we turned $1,000 into $10,000 or whatever it was with multiple predictions
yeah,
was the one that they took down, which nobody could have acted on anyway. So to me, it made no sense.
yeah, and that's that here. I mean, right here you can see, $1,000 in each stock would have got you $47,280. Which is about 120% in just 6 months, which is incredibly impressive. And in that, in that description, we showed which of the we were very transparent and we said like here are the biggest winners, highest returns ranked by peak value, from when you invested and when the highest point was, QMC 1,400%. That was carrying a lot of our picks. Some of these as well, and then even mentioned some losses, like even a 65% loss, 10% loss, but and also on oil as well. We're going to touch on that shortly. The losses aren't always a bad thing as well, because some of these losses, still maybe fundamentally good investment, and just means a better buying opportunity immediately. I can
Well,
think of.
the point was we were being completely transparent. We weren't. We were saying this is what we've done since we started making these recommendations on the channel, and
Yeah.
most of them did very well. But we were transparent enough to mention the ones that didn't do quite as well, even though we made they may still be very good investments. Like you mentioned oil, and I think oil. There's a great buying opportunity at the moment in oil.
Mm.
Yeah, it's come down $10 in the last week or so since the war scare that we had.
And just before we go on to that, I just thought another one that was interesting that they took down is, $2,000 in this one AI stock will surpass your full-time job. And what's funny about that is, yes, I do think this title is a bit outrageous as well. But I was just copying, other YouTubers, for example, here, I quoted a couple of other YouTubers that had some of their videos taken down. But if you look at the biggest channels on YouTube, they use the same title, but they actually made it even more outrageous. They said only $100 in this stock will surpass your full-time job. They then did say, oh, $100 every single month, but I think that's more outrageous claim than just saying 2,000, because 2,000 is requiring a 10x really, rather than whatever
Yeah.
these guys are suggesting. But
Well,
and yeah, I guess even one of our on lastly our favorite video, which was 10x your well, we said use a secret strategy to ditch the dollar, using credit cards, 0% interest, accounts abroad and family and trust. I think, yes, I agree with them. 10x your wealth, probably what they blocked it for. But the one that's again, they don't tell you, which is stupid. But they could have just said like remove the 10x your wealth bit, because I guess that's sort of a guarantee, which won't be true for some people.
yeah.
Um,
Well, it's interesting what is censored and what's not.
Then coming straight on to oil, obviously we've had it was down 10% roughly from when we made that video. It then has been up. So technically we have been up recently, but it's had that war pump, and now it's below, 5% lower than where the start of the war pump was.
When it
So
started out, and personally, I think oil is a great buy. I mean, it's almost if you measure it in terms of real money, in terms of gold, which we talk about a lot here. If you
mm,
measure oil price per barrel in terms of gold, it's as cheap almost as it's ever been. It's as cheap as it's been in the last 100 years.
mm,
So oil, to my mind, is a buy and a great buying opportunity at around $64, $65, which and I still think that in the coming months we're going to see oil heading back up towards that $100 a barrel
mm,
range. That's what the technicals are saying. We've got all sorts of signs of inflation. Central banks are still printing money.
mm.
I I think the downside risk of being in oil here is very limited, and the upside, who knows where it could go. But I'm certainly suggesting that we could be looking at prices over $100 per barrel
Mm.
and potentially going back above the all-time highs, which I think were around at 120 there or thereabouts in
130, yeah,
2022.
the 130 was the actual 2022 high. Yes, we had the COVID scare, but that was quite an unusual scenario where, if you're not allowed contact or go outside and stuff.
Where the price went negative, and a lot of people made a fortune at that when they were actually buying these. Oil went to this negative price where you were actually being paid to to take the oil because people were concerned because there was no travel, nobody was using oil, and they
Mm.
were concerned that anyone buying the futures would have to take delivery. And obviously, if you have to take delivery of your oil contracts, then you have to have somewhere to store potentially
Yeah.
millions of gallons of oil, and that was potentially more costly than giving the oil away. Which it's amazing how that kind of fear can overcome people, and so they sold this oil at a major loss. And it didn't happen for very long, but people made hundreds of millions of dollars buying this oil when it was a negative price. But that was a one-off event, which is very unlikely to be repeated. And I suggest that oil today is certainly priced in gold is as cheap as it's ever been and it's ever going to get. And
Mm.
it's a great opportunity for traders to get in there and make some money.
No, really interesting. And actually, I think I knew someone, or it might be someone you mentioned, who had been buying oil, and actually they did get a physical delivery of some barrels.
It's interesting because it's not easy to get physical delivery when you're trading in the futures market. In theory, for example, if you want to buy gold, if you want to go and buy gold and get physical delivery of it today, you're going to pay a premium on the price
Mm.
that you see on the screens. So it makes sense to buy the gold contract with COMEX and try
Mm.
and get physical delivery, but try and do that, and they put all sorts of hurdles in your way to make it very difficult to take delivery of the gold contracts. Oil, I would imagine will be no different. These exchanges are not really made for
Mm.
getting physical delivery, but if you can do it, you can make good money because certainly with the precious metals, you're buying the price that you see on the screen is always going to be less
Mm.
than if you go to your local gold dealer and try and buy gold. And I imagine it's not much. I've never tried to take physical delivery of oil, but I imagine it's a similar scenario. Some of these commodities, the good thing about the commodities like the precious metals is they don't take much storage space. Anyone can,
Yeah.
no one has a problem storing gold. You can store it in your house or you can bury it in your back garden or whatever. But
Yeah.
that's not the same if you're buying agricultural commodities like tons and tons of wheat or live cattle. I mean, you need to have a farm if you're going to take delivery of live cattle. But I suspect, again, that's not that easy to take delivery of. You're trading futures on
Yeah.
these things. Or orange juice, another one. You need to have storage tanks. So it's interesting to look at these things and take it through to its logical conclusion that you're supposed to be able to get delivery of these commodities, but in practice, it's not as easy as it should be in
Yeah.
theory.
Yeah. And just expanding on that, we're talking about oil, talking about gold. I think we did a video about, portfolio allocation is sort of 70% commodities like real money, which includes, metals and but also oil. Then we said 20% shares and 10% cash or spending for a year. I'm just thinking of scenarios where oil falls, scenarios where oil increases, like with wars, but also just in general because it's actually got real value to it. And then maybe also some. I think the only way it could fall like a COVID sort of scenario is maybe if we had these eco lockdowns. Instead of a COVID lockdown, you have environmentally friendly, crazy activists causing for
Mm.
lockdowns. That would be something that might send it to lower. But you can dollar cost average as well.
Yeah, I mean, I think when you're looking at the oil price at the moment, you have to ask yourself, why is it so cheap? And it may well be that the market's pricing in a future recession
Mm.
where there is less travel, there are potentially environmental lockdowns or whatever in the future. But I don't think these things would ever work. And is there really going to be a scenario where the world economy as a whole, where some parts of the world are growing at a very fast rate, the developing world is growing at a fast rate, is there really going to be a scenario where the world uses less oil year over
Forever.
year
Yeah, for a
for a
long
sustained
time.
period? I don't think so. I think if we ever see that scenario, we're potentially going to have bigger problems to worry about than the price of oil.
Yeah, yeah. And often, oil is something that's going to bounce back very, very quickly in these sort of scenarios. I mean, even when it was negative, it only took a year and a half to get back to well over double the
Yeah.
price it was trading.
But but of course, anyone trading should be trading with a stop loss in place of
Mhm.
a maximum 10% of your entry price. So nobody should be holding it through whatever happens. Yeah. The other way to play it, of course, the big oil stocks, which Standard Oil and so on, which some of them pay a decent dividend, and you get the upside, and you get the equity value of the companies that own the oil refineries and so on as well. So that's another
Mhm.
way to play it if people prefer stocks. So there's there's an ETF for the oil stocks. OIH is the sign.
And it's the same when you mentioned about when we mentioned gold before and gold stocks, because they can often be disconnected from where the actual asset or commodity price is. But you do have to make sure these companies are legit and there's no funny business going on. But if they're big,
Yeah,
well-established firms,
yeah.
then you don't have these issues. It's more small caps.
Yeah, I mean, there are various ways to play it. I mean, the small companies, of course, you can get 1,000 times return, but you're taking the risk that many of them are going to go bust as well. So I'd
Yeah.
say that's true whether it's small companies looking for oil, looking for gold, whatever, because
Mm.
these are tough businesses where you've got to go and spend a lot of money up front to go and find oil on the ground or go and mine for gold. And there's a lot of scammers in these businesses as well that set up companies and pretend that they've got this big discovery, and it ends up being nothing.
Yeah,
So you've got to be
exactly.
very careful. Personally, I prefer to trade in the majors, the big gold companies
Mm.
like Barrick and so on. But I can understand why people like having a punt on the smaller ones too, because there can be big money to be made. But
Yeah.
you've got to be careful, and you've got to play with money that you're prepared to lose with these smaller stocks.
Yeah, exactly. And one gamble of a small one I saw for gold was it's got great ticker ROC, Trident Resources, and the ticker's ROC. They have something like 4 billion worth of gold, but the market cap or potential gold presumably hasn't been mined yet. And the market cap's just 18 million, and it's apparently
I suppose
fully
the
funded as
big
well.
question with any stock like that
Mm.
is they've got 4 billion gold reserves, but you've got to make sure it doesn't cost 5 billion to get it out of the ground.
Yeah,
So,
there you go,
I'm
exactly.
sure there's information out there in the companies how much they reckon it will cost to mine an ounce of gold,
Yeah.
and if they can get that gold out of the ground at $2,000 an ounce, cost to get out of the ground, as long as the price stays around about where it is, then it's going to be very profitable. So that's the kind of questions that you
Mm.
have to be asking. You have to see how they can prove that they've got the reserves that they say they have.
Yeah, and also then the credibility of the people and how long they've sort of been in this state for. Please don't forget to like, subscribe, turn on post notifications, and join our Discord chat room linked in the description so you can see these plays and get in these opportunities when we do.
In the modern world, great leaders resolve their conflicts with words.
As for me, I like the stock.
Order filled.